Hello, good morning, and welcome to my morning report analysis videos on Monday, 23rd of October, with me, Richard Perry, market analyst at Hantec Markets. We've got pretty strong dollar, which is taking hold once more, and that's come on the back of Friday's news that the Senate passed the budget, and that sort of improves the prospects of Donald Trump being able to get through his tax reform program. Doesn't obviously guarantee it in any way at all, but just improves the prospects, and subsequently the dollar has strengthened on the back of that. Let's show you the dollar index, which, as I said, rallied on Friday. That rally came driven by the treasury yields, which spiked higher. That 10-year treasury yield back towards 2.4%. That is, I'm sort of taking that as a bit of a key level, really. It's been the barrier for the past few months, and I think a breakout above that would suggest that the market is moving strongly higher on treasury yields. If it can sustain that move anyway. 2-year treasury yield again pulling out strongly higher, so that is certainly a driver of this dollar strength that we're getting. Big head and shoulder reversal potentially on this dollar trade weighted index, so watch that for that. But across the board this morning we're seeing dollar strength again. You've got the euro weaker, you've got the yen weaker as well. That yen weakness is being also exacerbated by the news that Shinzo Abe won the Japanese election at the weekend. That sort of puts him on course to continue Abenomics, which is a yen weakening strategy there for Japan, and that is putting the yen under pressure again today. So that those yields coming higher on the treasuries, again pushing gold lower today, $5 down on the day. We're also seeing equity markets which are sort of holding on, a little bit consolidating, nothing too significant. We've got the sort of political risk from Catalonia still sort of bubbling up in the background, and yeah, that's still an aspect I think that traders will be looking out for. But yeah, that is something that is sort of preventing European markets pushing out strongly higher, considering the gains that we've seen on Wall Street. This is the S&P 500, which is again very, very strong on Friday, as that, as I said, the improvement in the prospects of tax reform came through. So in terms of today's moves on the markets, not a great deal of economic data apart from Eurozone consumer confidence at what time is it? 3 o'clock. Minus 1.1 is the expectation there, so minus 1.2 was last month. So nothing really doing at all. But my chart today is dollar CAD. Now this is an interesting one because dollar CAD has been consolidating, but consolidating underneath this downtrend, consolidating for the last sort of couple of weeks, but broke out sharply higher on Friday as that dollar strengthened, and that breakout above 126 is a key move because it also broke that downtrend. So if you can sort of compound that break, confirm that breakout with a move above that reaction high that we saw from a couple of months ago, then you could continue to see that move breaking higher in due course, I think. So this is the 2660 is the resistance, and if you break out above that, you're looking at 2778 or 2780, I suppose. But certainly the improvement in the market continues. So what we've got is also on the hourly chart where you're consolidating, as I said, above 26 figure. That is your sort of initial support for a pullback, and 2560 is a key level as well. So yes, some key levels to look out for there, and the resistance at 2640 initially today, but as I said, it looks more positive on the momentum indicators certainly, and yeah, looking to push out higher. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.